Hello, everyone. Happy Friday to you. So excited to be with you here this morning. Good morning, good afternoon, and good evening, depending on whichever part of the world you are tuning in from. It's very the last 24 hours has not really been impressive, especially on my favorite asset, which is the gold, as we saw price action went into a stop loss yesterday as well, as a result of the volatility that resulted following the CPI data, the much anticipated CPI data that came in yesterday. And surprisingly, the CPI data came in beyond expectation, catching the market by surprise, and of course throwing a clog in the wheel of the expectations that there is likely going to be an early rate cut by the Fed as early as the month of March. And right now we are caught in a limbo on what the Feds are likely going to be doing. And as a result of this kind of situation, because of this kind of situation, I usually advocate that we diversify our portfolio. So that is why it's very important you have at least a set of assets you usually trade, like 3 or 4 of them, so that you don't put your eggs in only one basket. And most importantly, when you do this, you mitigate against risk of exposure by spreading your investment across different assets, of classes or industry, depending on whichever suits your style of trading. And this strategy actually helps reduce the impact of poor performance in one sector, especially what we saw during the course of the week, where the XAUUSD did not do very well at all. So this is why I usually emphasize the need to diversify your portfolio. But it's okay. This today is the last trading day of the week, and usually when we come to the last trading day of the week, it always comes with some certain peculiarity, as majority of the key players at the market will be rounding off their trading activities ahead of the weekend. And usually when this happens, we normally see price action do a reversal from the prior leading price action. Let's say, for instance, majority has been buying a particular asset throughout the course of the week, and those who had and some profit from that movement may likely want to be taking some profit off the chart as a result of the approaching weekend, which usually reflects on the chart as a reversal setup, moving price into the opposite direction. So we are going to be taking all this into consideration while we review the current market structure from a technical standpoint. Well, since the beginning of the week, we have been monitoring 3 major financial assets, which includes the US oil spot, the GBPUSD, and of course the XAUUSD. The US oil did very well this week. We had situations where we sold. We also had situations where we bought too as well. And on the GBPUSD, though, we had some choppy situation during the course of the week, but finally it appears the pound sterling has been gaining some traction as projected. Remember, I did mention how for me to sell the pound sterling, I will need significant confirmation, which of course never happened. And of course, on the XAUUSD, which is the underperforming asset for this week. So we are going to be looking at this and see how we intend to position ourselves strategically for today's trading session. And for those of you who are joining me for the first time, you are highly welcome on board. I'm very excited to have you around with us this morning, and I know you will be wondering what this is all about. What is it that we really do here on the Forex Morning Mastery? Well, first of all, I would like to state here that I usually share a couple of videos during the course of the weekend where I detail my plans for the new week in these videos. Now, the Forex Morning Mastery was born out of the necessity to do follow-up details on this particular asset. So here on the Forex Morning Mastery, we review the 1 hour time frame, which happens to be our execution time frame, to analyze review, and see how we can strategically position ourselves for everyday's trading session. So we come together here as a community, engage in follow-ups and reviews of this particular asset ahead of the London and the New York session. So the session officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make your own independent trading decisions. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So once again, I welcome you all on board and encourage you to engage in the comment section as we run through the event. So with that being said, we will be diving right into the business. Before I do, I can see a couple of comments in the comment section, and I'm so excited to have you around. Foebi Oyigi, good morning to you. Ronald Kalnin, trust you're doing very well. Glad to have you around with us this morning. Hello, Joseph Hoffman, trust you're doing well. Hoffman from South Africa, right? Compliment of the season to you. Thank you very much for checking in on us this morning. So with that being said, we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring this economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential opportunity prior, during, and even after this economic event. So far this week, based on the assets we have been monitoring, we have been focusing on high impact events from both the United States and the United Kingdom economic docket. Now, yesterday we witnessed the most anticipated event for the week, which was the CPI data. And one of the major reasons why this data was so anticipated is simply because of how it has a major influence on the trajectory of the Fed's interest rate decision for the year. Prior to this, everyone has been looking forward to a rate forecast early as the month of March, which has been exerting some downward pressure on the US dollar. However, the report from yesterday came in at 3.4% higher than the anticipated 3.2%, giving us a deviation of 2.2, a positive deviation of 2.24. Now, this asset has struck a clock in the wheel of the expectations in the market. Now, how are we going to be planning ahead of this? What is going to be the reaction of the Fed policy makers, which we are yet to know. However, today, Friday, we are looking forward to a speech coming in from Kashkari, which is coming later today. Kashkari is the 9th District Federal Reserve Bank at Minneapolis, and is going to be giving a speech today. And whatever he says today, everyone will want to listen to have an insight into the monetary policy outlook of the Federal Reserve, and of course the potential decision that might likely happen in the month of March. Now, besides this, we are looking forward to another impactful event today from the United States, and that is the Producer Price Index. Now, for those of us who do not know what the Producer Price Index is, well, this data here is released by the Bureau of Labor Statistics, and of course it measures the average changes in price in primary markets of the US by producers of commodities in all states of processing. Now, generally speaking, a high reading is seen as positive for the US economy, which could dovetail to a positive traction in favor of the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of November, it came in at, in fact, we have some three factors here when it comes to producer price index. We have the year-on-year for excluding food and energy. We have the year-on-year, that is the conventional one. We also have the month-on-month, the conventional one, and the other month-on-month for the excluding food and energy. But the most important one everyone will be looking forward to is the year-on-year, and the previous data came in at 2% and 0.9% respectively. Now, based on what is on ground right now, economists are projecting a 1.9 and 1.3% respectively for the month of December. So we look forward to see what the actual data is going to be. Will it be just as expected, below expectation, or even beyond expectation? Now, one thing we do know as technical traders is that prior to this event, we usually see how market participants anticipate this event, which of course will reflect on the chart as structural patterns that we can use to guide our decisions for today. And this is simply what we are going to be doing today during the Forex Morning Mastery, to identify new trading setups that we will be using to guide our decisions for today. And that reminds me, we had some event that came up this morning affecting the pound sterling. Of course, it came from the United Kingdom, and it was good news. At some point, the manufacturing production sector expanded by 0.4%, beyond expectations, which was supposed to be at 0.3%. And of course, we had the gross domestic product month-on-month for the month of November coming in also beyond expectations. So it shows that there's been a little bit of expansion in the United Kingdom, unless for the manufacturing production, which came in for the year-on-year came in at a negative deviation of 0.30. So we of course going to be looking at how the pound sterling has reacted to this event and how we intend to position ourselves for the next move. So with the information we have gathered here on the economic calendar, we shall be diving right into the business to see how we intend to position ourselves from a technical standpoint. So I see your comment. Oh, sorry. Thank you very much, Ronald Carlin. Thank you very much for that feedback. I never knew the music was playing. I do hope you heard me very clearly. Should I take it all over again, or did you not hear me at all? Devan Shetty. Hello, Shetty. How are you doing this morning? Good morning to you. Glad to have you around. It's been a very long time. Trust you are doing well, and Happy New Year to you. You say here, hope you're. I'm doing very well. Thank you. Your bag. Oh, thank you very much. Thank you very much. So I think I will just have to do a quick recap. Should I do that? Please let me know in the comment section. Should I do a quick recap of the economic calendar, or we should just dive right into the technical details for today? Okay, so I guess okay, let me just quickly do a recap, a just short recap of what I talked about. Okay, Junarino says no need. All right, so we just move on to the assets on our watch list. So the first asset we will be taking on. Now we have yes, Raja says we should do the recap, and we have Ronald says we should do it. So I think the yes takes the day. So let's go back into the quick recap of the economic calendar, and then we will start the session all over again. All right, so Right on the economic calendar here, I did talk about what happened yesterday. I talked about the CPI data, which was the most anticipated event for this week. And the reason why it was the most anticipated was simply because of the fact that it's going to be determining the trajectory of the interest rate decision by the Fed for this year. And prior to this event, we have this general notion that there's likely going to be a rate cut as early as the month of March. And we had some Fed officials which also emphasized that there is likely going to be at least 2 or 3 rate cuts for the year 2024, as the inflation pressure in the United States was actually reducing. However, we were caught by surprise from the data that came in from the CPI for the month of December, coming in beyond expectations at 3.9%, giving us a positive deviation of 2.04, which of course emphasized that there is an increase in the inflationary pressure in the United States. And whenever this kind of situation happens, it is expected that the Fed will want to mitigate this by increasing interest rates. So this throws the possibilities of another rate hike on the table. However, we are still not sure if this is going to be happening. We still look forward to some data coming up later today, and that is the producer price index, which of course I did mention. It's the measure, it measures the average changes in prices in primary markets of the US by producers of commodities in all states of processing. And I did mention that the PPI data, if it comes in higher, it gives us a positive signal as regards to the US economy, which will dovetail in positive traction in favor of the US dollar, while a low reading is considered as negative. And we looked at what the previous data came in, and I did emphasize that the most important one is the year-on-year, excluding food and energy, and of course the month-on-month producer price index. And the data that came in here for the previous month came in at 2% and 0.0% respectively, and we have market economics projecting 1.9% and 0.1% respectively. So it's more of a mixed expectations here, but one thing we are going to be doing is to anticipate and see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? And one thing for sure we do know as technical traders, that as the event draw near, we begin to see some signs that the inner circles who already have a briefing of what the data will be will likely be positioning themselves for the event. And as technical traders, we want to be looking out for these patterns and structures to position ourselves strategically for the next move. So stay tuned in. We will be discussing on that one from the technical standpoint. Then we also had some event that came up earlier this morning from the United Kingdom. It was all good news from the United Kingdom, as we had the manufacturing production for the month-on-month coming in beyond expectation, giving us a positive deviation of 0.09. And we also had an expansion too in the GDP data, which came in at an expansion rate of 0.3% beyond the expectations of 0.2%. Good news there for the United Kingdom, and we are going to be looking at how the market reacted to this event and how we intend to position ourselves for the next move. So I do hope I made myself very clear there, and I'm sorry for the sound in the first place. So with that being said, we shall be diving right into the business. So the first asset we are going to be looking at this morning, as usual, is going to be the USOILSPOT. You're welcome, Rajabidi. And so, my US pulse. Okay, finally it comes back again. So on the USOILSPOT this week, we've done pretty well. So far this week, we had situations where we sold, and throughout the second half of the week, I think from Tuesday, Wednesday, Thursday, we actually have been looking out for buying opportunities as price action remain above the ascending trend lines we identified on the higher time frame on Monday's session of the Forex Morning Mastery. And let me make a quick reminder here for those of you who are joining us for the first time and probably had missed out on our first edition on the US All Sport, I would encourage us all to watch that video, as I did a top-down analysis on what things are looking like on a higher time frame. So on the Forex Morning Mastery, we only focus on the 1 hour time frame. If you in any way missed out on that one, you can check the link in the description box of this current video you are watching. Check them out after the live session so you can have an insight into what we talked about and how we did got to this point. So at the beginning of this week, we saw how price action was initially caught within a range that was between the $73.75 level and the $72.65 area, where of course how we do it. Whenever we have this type of simple structure, we exercise patience, looking out for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, we did have our first sell position for the week. In fact, the US All Sport happens to be the most profitable asset for us this week so far. We had our first sell position triggered, had the breakdown of that support line right there on Monday, giving us over 240 pips move, as we saw price move all the way into the $70.40 area before that bullish momentum came in. And right here on Tuesday, we begin to notice that sellers were finding it difficult to break through the $70.40 level, giving us a range. We had a range where price was initially confined within the $71.20 level and the $70.40 area. And one interesting thing about this range was the fact that it was sitting above that ascending trend line we identified on the higher time frame, further emphasizing that we might likely be seeing a bullish traction from this particular zone. Now, as a result of this observation, we did position ourselves above the $71.20 level after identifying a potential reversal pattern in the form of a double bottom structure, as you will see here, where the neckline of this double bottom structure shares a beautiful confluence with the resistance line of that range at the $71.20 level. So with a buy stop order above the structure, we capitalized on that bullish momentum, rode the momentum all the way to the upside. And I can remember right here on Wednesday, I told us all to move all stop losses, secure the current position, and the worst case scenario here, you must have been taken out with a reasonable amount of profit, maybe around 100 to 50 pips thereabout, depending on where you have moved your stop losses to. Then we talked about price action coming back to retest the structure again after capitalizing on some sell position. I did tell you that I wouldn't be selling, but if you are a counter trend trader, you may want to capitalize on that bearish momentum to the downside. And remember the reason why this came in. We had the API data during the course of the week, which came in at a phenomenal high at about 5.3 million barrels. And whenever there is an increase in supply in the market, you know how the market drops to the downside. And we saw, out of the fear that this may likely incite a crash, we saw price drop into that area. And as soon as price got into the neckline of that double bottom structure we saw earlier, we saw buy pressure resume again from that particular zone to incite another wave of bullish momentum. Now, since then, we have been buying this asset, capitalizing on multiple levels like the $72.20 level, $72.65 area, the $73 area, and of course recently the $73.75 level. And for those of us who did capitalize on these opportunities, well done, and kudos to you for being on standby to capture this move. And as it is right now, since price action has moved significantly well in our favor, you do want to be moving your stop losses, secure your current position, as I did mention this during my commentary this morning on this particular asset. And if you would ask me, I will suggest that anywhere below the $73.50 level seems most appropriate to move your stop losses to. And always remember that we do want to be giving enough breathing space for price action to move around. Now, why is it that price is climbing and finding new highs at this particular point in time? Well, first of all, it's important to take note of the escalating concerns over potential disruption in oil supplies in the Red Sea. And we heard about, was it not yesterday evening, I heard in the news the recent airstrikes led by the United States and the United Kingdom targeted the Iran-backed Houthis in Yemen, which of course has heightened the apprehension that the situation might escalate the Israel-Gaza conflict into a broader regional crisis. And because of this apprehension, there's likely going to be a soar in price. And of course, we saw what happened yesterday. We saw a bullish gap around here. Look at what happened here during the later part of the New York session. I think this was around the exact time when the attack, the airstrike happened. We saw a bullish gap, and this for me is a sign that we are likely going to be seeing some new highs going into the later part of today. So we will be looking at that in detail. Then besides this, we also heard about the reports coming in from China yesterday. The trade data was very, very healthy for the month of December, surpassing all expectation, has the potential to provide additional support to crude oil, also increases in that regard, considering that China is the highest importer of crude oil in the world, and if the economy is doing very well, the tendency for them to export more also increases. So these two factors are really very good signals for buyers in this particular market. And as a result of this information, how do we intend to position ourselves for the next move today? Now, looking at the current structure from here, you will see that price action is back to a crucial juncture in this market, an area which is characterized as our key level for this week. For those of you who saw my video on the USOILSPOT at the beginning of the week, we did capitalize that the $74 area will be serving as a yardstick to guide our trading decisions. And of course, you know how we use our key levels in this community. When price action stays below our key level, we look out for selling opportunities, and if price action breaks out of our key level, we look out for structures and patterns that supports the idea of buying that asset. So because price started the week below the structure, we had the privilege of joining the bearish momentum, but as soon as price tested our ascending trend line, we saw momentum increasing, and of course the escalating tension in the Middle East was not helping matters for sellers, of course, so we had to change our perspective and join that bullish momentum. Now price is back into that area where price started this week has already been broken. That is the $73.75 level has already been broken, though price still oscillates around that area, giving us a clue into the indecision going on at this point in time. So let me zoom into the structure, as this is where our center of focus will be for today. Now the question going into today's trading session is, will this $73.75 level, which happens to be our first resistant line for this week, will it turn out to be a continued selling pressure where price could still break down the structure to incite a sell-off to the downside? It's still a possibility that we cannot ignore. Or will price action break out of the key level at the $74 area to incite a new opportunities to buy this particular asset? So basically, what we are going to be doing here today is to maintain a bullish momentum, and as long as price remains above the $73.75 level, we look out for more opportunities to buy. And personally, I do have a buy stop order sitting above the $74 area already, with a stop loss sitting below the $73.70 area to maximize the potential of this bullish move. And remember that those who still have a buy position, I told you, move your stop losses accordingly, as we might likely see some volatility around this area as market participants look forward to the PPI data, which of course will also affect the US oil because of it is a US dominated asset, US dollar dominated asset. So we keep on a bullish bias on this one. And in fact, selling the USOILSPOT, if you would ask me, I would not be looking for selling unless these ascending trend lines are broken to the downside. But in the meantime, I don't think they will be broken. But if anything of such is likely going to be happening, I will definitely give you an update on both my TradingView and Telegram platform as we continue to monitor price action from here. But I'm still very hopeful that price will continue to the upside. So this is my simple view on the US oil spot for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, after which we will move on to the next asset on our watch list. All right. Let me say this quickly. If you have found this content and session helpful in making your independent trading decisions for today, I'll really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the YouTube algorithm promote the video to a wider audience of traders who may find this content beneficial to them. Thank you very much as you do so. This is the cheapest way you can actually support this community to grow. All right, with that being said, and in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD. And on the GBPUSD, we've had quite some interesting situations going on in the market, though we've been buying this asset since the beginning of the week. But price, for me, I would not consider this to be huge traction at all, as we are within a limbo where the economic situation in the United Kingdom is not really doing very well prior to this morning when we had the GDP and the manufacturing sector data that came in this morning. And also we were seeing some signs that the US dollar also wanted to gain some traction, but the general opinion that there's going to be a rate cut as early as the month of March was actually supporting the pound sterling in that regard. But since the beginning of this week, despite the couple of buy positions we had, you will notice that the market has been a little bit choppy. As you will see throughout the course of the week, price action has been confined within a particular range between the 1.27650 and of course the 1.2700 area, as you will see here. However, when the week started, we had a range which was what we were using to guide our trading decisions, where price action was confined within the 1.273 and the 1.2700 area here. And you know how we do it in this community. Whenever we have a range like this, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, we did capitalize on the breakout of the structure. We had the breakout of the key level situated at the 1.272, capitalizing on that first buy opportunity for the week, which also shares a beautiful confluence with that descending trend line we spotted here on Monday's trading session. So we saw two positions running there. We had 1.272 and of course the 1.273, giving us a total of about 60 pips before the bearish momentum began around that 1.26750, a level which has been peculiar with selling pressure since last week Friday, as you will see here. And as a result of the selling pressure, I did mention that we move all stop losses, so we're able to take about 40 to 50 pips in profit after price took us out of that sell put of that buy position. Then we had some other buy positions around this area, which of course went into a loss. We recorded a loss on the GBPUSD around this area before we finally took advantage of another buy position right here 48 hours ago, riding that momentum all the way into this area before another wave of selling momentum came in again, taking us out of those buy position again. So you can see, despite the buying of the GBPUSD, we saw how the momentum did not last long, resulting in price action dropping, taking us out of that position. Then yesterday we saw, due to the volatility as a result of the CPI data, we saw this engulfing bearish candle. And I mentioned after the CPI data, I did mention that the CPI data could have resulted in the bearish momentum, and that we would need a significant confirmation before we can consider selling. And if you remember vividly, I did mention that the only condition that will make me want to be selling the GBPUSD is for price to indeed break down this 1.2700 area and give us a confirmation like a retest of structure, which of course is yet to happen, hereby negating the idea of even considering selling this particular asset. So it was more of looking out for buying opportunities on the GBPUSD. Then lately we also had another buy position triggered this later during the New York session yesterday at the 1.274, which is currently running in profit. We also have another one triggered at the 1.27650, which is currently running in a little bit of loss. And I did mention this morning that we should move all stop losses to secure the current position. And if you would ask me, I'm of the opinion that anywhere above the 1.27400 area seems most appropriate to move all stop losses to. So with a well secured position at this juncture, what is going to be our plans for today? Well, if you look at the structure, especially during the Asian session, you will see that the consolidation between the 1.27850 level and the 1.27650 during the Asian session highlights the prevailing condition in this, the prevailing market indecision in this particular market. And as a result of this, we need to be very, very careful, as I think market participants are trying to digest the recent economic data from the CPI to the GDP, and of course the manufacturing sector data and the industrial sector data. And of course we're still looking forward to the PPI data, which is coming up later today. And also we have a speech coming in from a Fed official later today. And I think as a result of this, we have seen this consolidation phase going on in this particular market. Whereas on the US Fed, we don't know how the Fed policymakers are going to be reacting to this sudden inflation, that is the 3.4% year on year that we saw yesterday. Now, considering these dynamics, it is very important to safeguard all buy positions, as market participants will closely be monitoring the upcoming PPI data from the US economic docket to look out for fresh impetus in this market. But from a technical standpoint, if you would ask me at this point in time, I still want to maintain a bullish bias here. But how do we intend to join that bullish opportunity? Well, if you look at the structure from a technical standpoint, the highest point price action has been for this week is the 1.27850 level. And for me to considering buying this asset, I would like to see price take out all the sell positions around this area to give me a little bit of confidence to join an uptrend move. As you will see, this level had been a strong selling niche in the last 24 hours. As you will see, all attempt by the buyers to break out of the structure was met with strong resistance from the sellers. So for me to considering buying or adding more positions to the existing trade, we want to see price take out the area that is breaking out of that structure, and possibly a retest will give us beautiful confirmation and confidence to stay in this bullish position. So this is how we intend to manage a bullish expectations on this particular asset. So I'm looking forward to the breakout of the 1.27850 to maximize the potential of this bullish move. However, in as much as we are looking out for buying opportunities, we cannot ignore the potentials of sellers. You will see since last week Friday, price has found it difficult buyers have found it difficult to stay afloat the 1.27650. Now, if the selling pressure around this area persists, we might likely see a huge sell-off as market participants round off their trading activities ahead of the weekend. And if I am going to consider selling, well, I would need price action to take out that ascending trend line. Very, very important. It must take out this ascending trend line before I can start considering selling this asset. So you do want to be marking out this trend line, which has supported this bullish momentum since the beginning of this week. Now, if price can take out that ascending trend line, price would also have broken down the key level we identified on the higher time frame at the 1.27200 level. Now, if price can break out this confluence, then at this point I may start considering selling this particular asset, and it depends on the nature of the price movement prior to the breakout of that ascending trend line that would determine if I would like to place a sell stop order below the 1.272, or probably wait for price to break down and retest the structure before jumping into any sell position. So, but trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the GBPUSD for today. I'm looking out for selling opportunities only if price action takes out the ascending trend line and our key level at the 1.272, and of course looking out for more opportunities to buy if price action can take out the highest point at the 1.27850. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So mark them out and let's see how the market will play out today. If you have any questions whatsoever as regards to the current setup we talked about here, feel free to let me know in the comment section. So I'll just zoom this out a little bit so that you can be able to mark out these levels appropriately. So I will take the next 10 to 15 seconds to see if there are any questions before we move on to the next asset on our watch list for today. All right. So I see, hello Torres Master, good morning to you. Glad to have you around. It's okay. You can always, after the live session, you can always watch the replay to have an insight into what we talked about. So I'm very glad to have you around, Torres Master. Trust you are doing very well out there. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard we shall be moving on to the last and final asset on our watch list for today. So The final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And my favorite asset did not do me very well this week at all, as we had three setbacks to this week so far. Let's look at what really happened the course of the week. Initially, we had a sell position. Remember, we initially had a range identified where price action was started the week around the $2,046 level, and we saw how the momentum spiraled all the way to the downside, finding a support around the $2,027 area to give us a range to work with at the beginning of the week. And for the fact that price action did break down our key level around the $2,035 area, for those who are joining us for the first time, for you to understand how we were able to identify our key level at the 2035, I encourage you to watch my videos, my weekend videos on the XAUUSD, where I gave a detailed top-down analysis into this current asset and how we were able to use the key level to guide our decisions for the week. If you missed out on that video, check the link in the description box below, as I have it the links detailed there. So for the fact that price action was trading below our key level, and of course the strong momentum to the downside, we looked out for selling opportunities below the $2,027 area, and of course price did move about 100 pips in our favor before the bullish momentum came in, and of course we did move our stop losses accordingly, secure the current position, and as a result of that, we had price take us out with a reasonable amount of profit, or at a worst case scenario break even. And I think at that point was the last time we had some profit on the XAUUSD for this week, as we saw after seeing how the higher lows evolved in this market, we decided to buy this asset around the $2,035 area. And at every point in time that we were buying this asset, we saw at every point in time we were buying this asset, we get taken out from this position. We bought around this area on Tuesday, we bought again on Wednesday above the 2035. It went into a loss. We also bought here again during our live session yesterday. For those of you who were part of the XAUUSD live window, we also bought again around that area, which interestingly lines up with that descending trend line we spotted since the beginning of the week, and price action went again to take us out of that position. So we had three positions. We lost our trades on those ones. It's okay. We still hope that we will be able to recoup these losses we made. The year is still very, very early, and we still have enough time for this month to be able to recoup the loss we incurred so far. So it hasn't been an interesting week for us all on the XAUUSD for this week. And one of the reasons why we kept on looking out for buying opportunities was the fact that price action was, sellers were finding it difficult to break down the zone around the $2,027 area and the $2,017 area. We saw buy pressure around this area at the beginning of the week. We saw the same thing happen around here, and during the midweek we saw how this level continued to negate all attempt by the sellers to break through that particular area, making us identify that area as a new demand zone, looking out for buying opportunities at the breakout of the key level. So it wasn't a rosy week for us all, but it's okay. Let's see how to position for the next move. Now, during the early hours of today, we had another buy position triggered again, had a $2,035 area. So we keep on buying as long as the structure is in alignment with what our expectations are. So we have another buy position triggered, and if you took advantage of that opportunity, well done to you, as you will currently be running with about 35 pips in profit at this point in time. And as it is right now, and based on our experience so far this week around this particular area, I will be suggesting that we move all our stop losses to break even on this particular trade. Let's move our stop losses, secure this position, as we may see price drop to the downside. Now, why have I said that price may drop to the downside? Well, let's look at what has been going on here and what we saw during our live session yesterday. Now, I will zoom out a little bit and to go to as far as the beginning of this year, and you will see that since price action started this year, price action had consistently and uniformly found lower highs in this market. And whenever we identify lower highs like this, we connect a series of lower highs, giving us a beautiful descending trend line to work with. And of course, you know how we use our descending trend lines in this community. When price remains below the descending trend line, we look out for patterns and structures that support the idea of selling that asset. But at a point in time, we were not selling because of the demand zone we saw around the 2020 and the $2027 area. And I did mention that for me to sell, I want to see a significant confirmation, like a breakdown, which of course happened yesterday. But instead of seeing a retest of structure to inside the sell-off, we saw how price broke out of the descending trend line. Now, with the breakout of the descending trend line, this is a good sign for us that we may be seeing a reversal setup unfold to incite another wave of bullish momentum. Now, why do I say we could see a sell-off? Well, from a technical standpoint, whenever price action breaks out of a key structure such as this descending trend line, we do expect at some point in time price may come back to retest the structure, which interestingly shares a confluence with that demand niche around the $2027 area to incite another wave of bullish momentum. So that is why I said we should move all stop losses, secure this current position, and let's see what will happen here. Will price come back to retest the structure that was broken to incite another wave of bullish momentum, or we are going to be seeing price break out multiple levels here to maximize the potential of this bullish move? Personally, if you would ask me, I still think that the market has a tendency of going to the upside. So as a result of this, we have multiple levels identified here that we will be using to maximize the potential of this bullish move. So we have the $2,040 area, a level which has been a strong selling niche since the beginning of this week. Now, if price can successfully break out of this level, then I will feel very confident that we are going upward. So a breakout of the structure give us more opportunities to buy. Then we also have more levels like the $2,046.50 area, and of course the $2,050 area, all of which a breakout retest will welcome more buy positions in this particular trade. And if you are going to be with us during the XAUUSD live window today, you're definitely going to see how we shall be managing our position real time on this particular asset. I already dropped the link to the XAUUSD live window right in the comment section below. You can click on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who are joining us for the first time who do not know what the XAUUSD live window is all about, well, the XAUUSD live window is a platform born out of popular demand from members of this community, where we come together to monitor real-time price action on the XAUUSD during the New York session. So it usually kickstarts 5 to 10 minutes into the New York session, and of course it lasts about 5 to 7 hours depending on the nature of trading activities for that day. So I look forward to seeing you guys right in the XAUUSD live window today. So the links are right in the description, in the comment box. Click on it, click on the notify me button so you can get notified as soon as we come on live. So this is my simple view on the XAUUSD. Let's see how things will play out today, and trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. I maintain a bullish bias on the XAUUSD no matter what happens here, unless the current structure give us significant signal that prices will be going to the downside. And of course, I will be updating you accordingly in my social media platforms. So if you have any questions whatsoever, feel free to let me know in the comment section. And in that regard, I'll be taking the next 5 seconds to see if there are any questions before we move on to round off for today's Forex Morning Mastery session. And please, if you have found this content helpful and useful in making your independent trading decisions for today, feel free to click on the like button. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders. I'm yet to see the likes come in. As at the moment I'm seeing about 5 likes here. Guys, try to like this please, and I really do appreciate it. Thank you very much. All right, so let's see if there are any questions whatsoever and before we round up. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be rounding off. We were able to take on 3 major assets today, including the GBPUSD, the USOILSPOT, and of course the XAUUSD, where we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And I do hope you all marked out these levels on your chart, and if you do, I encourage you to exercise patience and allow the structure to mature before jumping into any positions for today. And remember that every decision we make in the financial market is more or less an educated guess, and as a result of this understanding, you do want to be having a well-defined risk management strategy in place for every of your trades you take from your portfolio. And it's on this note I want to wish us all the best of luck. And for those who are joining us for the first time, I didn't forget you guys. I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you do, you want to be part of our subsequent editions, that is on Monday, so that you can trust me, the more time you spend with us, the better you get to understand how things works here, and eventually be able to use the information gathered here to make your own independent trading decision. And if you are yet to subscribe to the channel, I encourage you to do so as we head into the weekend. And of course, during the course of the weekend, I usually share the ideas I plan for the following week. So it starts from tomorrow. So once you've subscribed, you get notified as soon as I share my new ideas. So with that being said here, I really appreciate every single moment with you guys. I wish you the best of luck today. I wish you a wonderful weekend, and looking forward to seeing you same time on Monday morning as we come here to review and see how well this asset have done and see how we intend to position ourselves for the new week. Do have a wonderful evening, everyone. Trade smart, trade consciously. Bye-bye.